After 6 days of a non-stop one-way rally, the market is a little mixed today. While Nifty crossed over about that 23,800 level, intraday mids and small caps are lower in trade. Trump threatens a 25% tariff on any trade with countries that buy Venezuela oil and gas. This would impact China and probably India. Analysts at ICICI Securities, though, do not see a major impact for India or Indian companies as the quantum of imports from Venezuela is low. SEBI eases disclosure norms for a smaller foreign portfolio investors, also announces the formation of a high-level committee to review corporate governance norms at the SEBI. Tuhin Kanta Pandey, the new SEBI chair, is in response to a question says that they will examine the NSE IPO matter, but did not commit to a specific timeline. And the management of Electronics Mart of India and the head of Retail Association tell CNBC-TV18 that the consumer spending in Q4 has remained muted, while EMIL points to the same-store sales growth of 5 to 6%. RAI says that industry has seen a near zero growth in apparels and very low growth in electronics. Both pointed to the recent stock market decline as a sobering influence on sentiment. Hello, good afternoon. You've tuned into Business Lunch, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much, as always, for tuning into CNBC-TV18. A quick look at what the market is doing. A mixed opening is what we're seeing coming in, few in the red, few in the green as well. Now, Nifty is off the day's highest point, right now managing to hold on to some bit of a green, but it did go in the red territory at some point of time as well. Look at the contributors coming in. HDFC Bank, Infosys, UltraTech Cement, TCS among the support coming in for the Nifty 50, while the drags is ICICI Bank, Reliance, L&T, IndusInd Bank. So some bit of a pressure is coming in on that front as well. Mid and small cap, let's look at that because that's an underperformance coming in on that front from the broadwood end of the market. And this is after 6 consecutive days of gains with the Nifty mid and small cap. We've seen a decline for both these indices. Nifty Bank, let's pull that up as well. Nifty Bank, after 8 days of gain, consecutive trading sessions of gain, we've seen a decline coming in today for the Nifty Bank. It did open up in the green, but as of now is trading in the red, almost near the day's lowest point is what the Nifty Bank is trading at, down 0.2%. The only sector that's trading in the green is Nifty IT. We did see those names coming in for the Nifty 50 as well, right? TCS, Infosys. So that is why what we're keeping an eye out on. Nifty IT is the only one trading on the green side. But let's move on, and RBI has modified priority sector loan rules. Now, how will this impact banks? Lata is joining in with us to give us more details on this one.
Well, first things first, priority sector is that 40% of all the loans banks have to give some favored sectors like, farming, affordable housing, renewables, etc. Now, regularly the Reserve Bank does modify these rules because they have to at least adjust for inflation, sometimes even for new products like renewable products. So what is the revision now? Houses, the limit has been raised as to what will qualify as priority. For big cities, over 50 lakh population, they used to give only up to 35 lakh loan as priority. Now it can go to 50 lakh. For smaller, for smaller towns, mid towns, the level goes from 35 to 45. And for, very small towns, the limit used to be 25 lakh to qualify as priority. It goes to 35. Then there are other limits that have been raised. You give even for damaged housing repair. Even there, similarly, for various categories, the limits are raised. Education loans, only 20 lakh was considered priority. Now it's become 25 lakh. So loans for, drinking water in schools, sanitation, that has been up from 5 to 8 crore. Healthcare in tier 2 and lower cities, smaller cities, has been up from 10 to 12 crore. And the number of people who qualify as weaker section, it has been increased a little, artisans, cottage industries and women, and also the amount that you can give them to qualify has gone up from 1 lakh to 2 lakh. So basically, they're adjusting to inflation and they're adjusting to a few new products. Then there are smaller, ease of doing business for banks, if you please. There used to be an interest cap if banks sold off the loans in the form of securitization. Those caps are gone. For urban cooperative banks, there is a genuine big relief. They had to give 75% of their loans as priority loans. Now they have to give 60%. And then for renewable energy, more projects under renewable energy are included as priority. You know, these are also technological advancements which bring new products into the market. Now, who benefits? Well, all banks benefit in a way because it's easier to find a priority sector borrower. You know, if it is a very small amount, it becomes more difficult for them. And HDFC Bank benefits because, you know, they had this huge HDFC loan coming in and they had to do priority sector for that entire lot of some 7 lakh crore. Now more of the erstwhile HDFC loans will qualify as priority sector because the limits have been raised. And likewise, other banks, this is an IIFL note, which says banks like RBL, SBI, IIB, Federal, used to now and then fall short. In 2024, they fall short of that 40%. Then there are ways you buy priority sector certificates from other banks, or you have to invest in what you call RIDF, Rural Infrastructure Development Fund, done by the NABARD. That will be less. You know, that gives very little money, these other avenues. Now that the limits are raised, these banks can perhaps lend more profitably in the priority sector category.
Thank you so much for that, Lata. Now let's move on to the news. SEBI Chief Tuhin Kanta Pandey chaired his first meeting after taking the helm of the market regulator body. SEBI has decided on a host of changes, and here are the key highlights. SEBI has raised the threshold limit for FPI to make additional disclosure to 50,000 crores in equity AUM in India versus the earlier 25,000 crores. SEBI will no longer prescribe a cooling off period for public interest directors transitioning from one market infrastructure institution to another, but existing process for the appointment of PIDs will remain unchanged. The other important change is that the registered investment advisors can collect up to 1 year's fee in advance and reversing the previous 3-month limit that they had. The market regulator has also decided now to form a high-level committee to look at the rules governing to conflict of interest, which is there, and related matters pertaining to SEBI board members. And lastly, the SEBI chief signals a review of the NSE IPO proposal, and here is what he had to say. Listen in.
But surely, I think we'll look into it. You know, I've just, you know, sort of we'll apply our mind on how is it and how we can take it forward and what's the issues.
And moving on, the post of the 4th Deputy Governor at the Reserve Bank of India remains vacant nearly 70 days after Michael Patra's retirement. Now, the RBI traditionally maintains 4 Deputy Governors, 2 promoted from within its rank and one from a commercial banking background. And one is an economist. Ritu is joining in with us to give us more details on this one. Ritu?
Well, it's a crucial role, and therefore prolonged vacancy does have critical consequences because it's been over 2 months since Michael Patra's retirement in mid-January, and the RBI is still missing a key decision maker on monetary policy. And this delay has not gone unnoticed by the financial markets, economists and policy watchers. The role is also vital because the Deputy Governor in charge of monetary policy is an ex officio member of the MPC that sets interest rates to maintain price stability. So while in the interim, RBI has reassigned this responsibility to Deputy Governor Rajeshwar Rao, who handles this portfolio along with his banking regulation duties, economists we've been speaking to warn that the absence of a dedicated Deputy Governor for monetary policy could weaken the depth of policy deliberations within the MPC. Keep in mind, Patra is a well-known, celebrated macroeconomist and was the only member to have served continuously on the MPC since its inception in 2016, steering it through many tough economic periods. Secondly, in the absence of the 4th Deputy Governor, RBI has had to reshuffle the 33 departments among the 3 remaining DGs rather than 4, leading to a greater concentration of responsibilities. And financial markets also closely monitor such appointments, and it tends to have a sentimental impact, and the delay in finding Patra's replacement is also being noted. Remember, the government had invited applications for this position back in November, which is a good month and a half before Patra was to retire, and we understand it has since held interviews with several candidates, including Poonam Gupta, Prachi Mishra, Chetan Ghate and others. Yet, nearly 70 days later, this critical seat remains unfilled.
Okay, Ritu, thank you so much for that. But, do keep an eye out on IndusInd Bank and Staralt as well. We had a couple of news flows coming in, and the ticker team of CNBC was surely flashing about that. Staralt, some bit of a negative news there, so keep an eye out on that one. But on that note, we're going to slip into a very short break. And after the break, we'll bring you with some details coming in as US President Donald Trump is threatening additional tariffs on countries importing Venezuelan oil. More on the story after the short break. Welcome back and thanks for staying tuned into Business Lunch on CNBC TV18. Now, the US President Donald Trump has indicated that not all of his threatened levies would be imposed on April 2nd, and some countries may get breaks as well. However, he also opened another front in a global trade war by announcing 25% secondary tariff on any country that buys oil or gas from Venezuela. Take a look at this report.
Donald Trump could be more flexible than expected over new tariffs on automobiles and other goods. Speaking at a cabinet meeting Monday, the US president said his threatened levies would be imposed in the coming days.
And we'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country.
But he said a lot of countries could get breaks without giving any more details. Earlier reports of the possible partial reprieve were hailed by Wall Street, sending US stocks sharply higher. But a White House official warned against expecting too much, saying Trump was still determined to impose strong reciprocal tariffs. The new president has regularly claimed that his trade policy will raise revenue and create jobs. On Monday, he announced a $21 billion investment in the US by South Korean giant Hyundai.
Hyundai will be producing steel in America and making its cars in America, and as a result, they'll not have to pay any tariffs. You know, there are no tariffs if you make your product in America.
The same day also saw Trump open a new front in his trade offensive. He said any country buying oil or gas from Venezuela would face a 25% tariff on exports to the US. Trump said the country was guilty of sending tens of thousands of very violent people to America. Venezuela's government said it firmly and categorically rejected what it called the new aggression. The latest move sent oil prices higher in Monday trade, with US benchmark crude gaining around 1%.
Now, following President Trump's tariff threat on countries that import Venezuelan oil, we spoke to Probal Sen, senior research analyst at ICICI Securities, to understand how the imposition of additional tariff could affect India. Let's listen in to what he had to say.
My understanding is that India imports close to about 0.2 to 0.25 million barrels a day of oil from Venezuela. When you consider that India's total imports are in the range of around 4.5 million barrels of oil per day, obviously it is a relatively small percentage compared to the percentage from, let's say, Middle East or, even Russia for that matter. But the fact is that if, the condition for avoiding this additional 25% tariff is that this oil will have to be replaced, then that's an additional sourcing that you will have to find from somewhere. From a supply security perspective, I guess because it's less than 5% or less than 4% of our overall crude slate, it's something that I think India can figure out how to basically, manage this hit from what we can tell.
And moving on, a team of US officials will be in India later this week for discussions focused on a bilateral trade agreement, with India looking for relief from tariff. Abhimanyu is joining in with us to give us more details on this one. Abhimanyu?
An American delegation is visiting New Delhi for trade talks between both the countries. This is not the first round of negotiations. What government sources have indicated so far is that India and the US are going to finalize the contours, the negotiation schedule and the terms of reference of the proposed bilateral trade agreement between both the countries, which is likely to be finalized in two tranches. The first phase of the BTA is expected to focus on issues pertaining to goods trade. What we have learned from sources so far is that the US has sought greater market access in certain industrial goods automobiles, wines and agriculture, and India may seek duty cuts in labor-intensive sectors like textiles. Now, both the sides are trying to find a common ground based on each other's strengths, weaknesses and sensitivities to create synergy for two-way trade and investments, as well as for predictability in tariffs, regulations and economic integration. More clarity is expected by the end of this week. It remains to be seen how the talks are going to pan out, based on which the negotiation schedule is going to be made.
Thanks so much for that. Meanwhile, the Trump administration is in a soup after it apparently added the Atlantic editor-in-chief Jeffrey Goldman to a Signal app, a group which was discussing strikes on Houthis. Sanjay Suri is joining in with us with more details on this one.
Talk of a journalist having a story drop in the lap or into a chat group he's on. The editor-in-chief of the Atlantic magazine, Jeffrey Goldberg, got invited, inadvertently it seems, to a group chat on the Signal app where top secret plans to attack the Houthis in Yemen were being discussed. Goldberg says he was invited to join that chat on March the 11th, 4 days before the US launched what it called decisive and powerful strikes against the Houthis. He says he was invited by a user, Mike Walls, believed to be the national security advisor. He was then added to the group called Houthi PC Small Group. Goldberg says that on that chat were accounts that matched the names of Vice President Vance, Defense Secretary Pete Hegseth, Director of National Intelligence Tulsi Gabbard, CIA Director John Ratcliffe. Goldberg has now published some of that chain of correspondence, and the White House acknowledged that it appears to be authentic. Though President Trump has denied any knowledge of it, he says only that he's no fan of the Atlantic. National Security Council spokesperson Brian Hughes has said they are now investigating how an inadvertent member was added to that chain. This has come as a shock here in Washington to see that top US defense team was discussing plans against Houthis on a social media communications app, and without checking who all had been invited to it, who were on it unknown to them, and of all people, a journalist. Goldberg now reveals that in the hours before the strikes began, an account attributed to Defense Secretary Pete Hegseth posted detailed information on the group's imminent attack, on targets, or the ammunition to be used, the sequence of the attacks. The discovery has now set off a furor within the Congress, particularly both Republican and Democrat lawmakers have been livid over this. Members from both sides have demanded a full inquiry, and Senate Minority Leader Chuck Schumer says he has demanded a full investigation.
Okay, on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more news and updates after this break. Welcome back to Business Lunch on CNBC-TV18. Now, moving on to some national news update coming in from the national capital. Delhi CM Rekha Gupta has tabled the first budget of the BJP government, and the BJP formed a government for the first time in 27 years last month after defeating the incumbent Aam Aadmi Party. Now, Gupta, who also holds a finance portfolio, presented a 1 lakh crore budget, and which is over 31% higher compared to last year. The government has increased the capex from 15,000 crore rupees to 28,000 crore rupees, and the chief minister has allocated 5,100 crore rupees for Mahila Samriddhi Yojana, under which the poor will receive 2,500 rupees per month for this. Now, the government, Delhi government, has also granted 696 crore rupees for deploying slum clusters in the city. And with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, your Midcap Radar.